Welcome to Behind the Advice, the podcast for Australians living abroad who want to maximise their financial situation. I'm your host, Mitchell Kelsey, a financial advisor at Runway Wealth Management, and in each episode, I'll be sitting down with other experts and professionals to get their insights, stories, and expertise on key concepts for Australian expats, as well as providing my own perspective. With this being a financial podcast, there is a disclaimer, so any information that you hear in today's episode is general information only. It is not personal advice, so it does not take into account your personal situation, goals, or objectives. If you do need personal advice, feel free to reach out to us at Runway Wealth Management for personal financial advice. Welcome back to the audio version of the Runway Report Newsletter, our monthly newsletter for all things financial markets, economic updates, and insights out of Australia affecting Australian expats. Happy New Year to our clients and subscribers. And without further ado, let's get into the January edition of the Runway Report newsletter. Now, as far as an agenda goes, it'll start off with a note from myself as the director. We'll then get into an expat insights. We'll then look at the market movements through December for Australian and international shares. And then I'll go through an economic update for both Australia and globally. So as far as the note from myself, Happy New Year. With the start of 2026 upon us, it's a great time just to think intentionally about your financial goals for the next 12 months. So effective goal setting is kind of less about ambitious resolutions and more about being really intentional about your goals. So the most successful financial plans are built around well-defined objectives, an understanding of priorities, and a willingness to review and adjust as circumstances change. So that's why we really encourage a few key principles when it comes to setting goals. So goals should be clear and specific. They should be aligned with your life plans, not just your finances. They should be realistic, regularly adaptable, and reviewed. And they should focus on progress rather than perfection. And as we move into 2026, our role remains the same: to help you bring structure, clarity, and confidence to your financial decisions wherever life takes you. So whether you're settled at home or abroad, considering your next move, or simply seeking reassurance that things are tracking as they should, please know that we're here to support you through the year ahead. Now let's get into the expat insight. So some financial opportunities for Australian expats in 2026. So as an Australian living and working overseas, your financial decisions are shaped not just by markets, but by currency movements, tax rules, and the unique opportunities available to you. So in 2026, careful planning around these areas can make a significant difference to your long-term outcomes. So I've raised 3 financial opportunities for expats in 2026. The first one is making currency work for you. So for many expats, converting foreign earnings back into Australian dollars is one of the most practical ways to improve financial outcomes. So the timing of those conversions can really make a meaningful impact. So here are some just strategies you can consider. Gradually increasing your Australian dollar exposure rather than converting large lump sums at once. That's just going to help you reduce the risk of locking in an unfavorable exchange rate. Today, you want to kind of stagger that over periodic intervals. And that's kind of part 2. So stagger conversions over time to smooth out volatility and capture more favorable exchange rates over time. Particularly for those expats that are planning to return to Australia in say 12 months, 24 months, you really want to plan ahead. And that the next few years, plan ahead over the next few years, just to minimize the impact of exchange rate swings on your cash savings. The second opportunity for expats in 2026 is optimizing your superannuation while overseas. So superannuation remains one of the most powerful and tax-effective tools for long-term wealth, yet it's often overlooked by Australian expats living abroad. Optimizing your super in 2026 can have a significant impact on your retirement outcomes. So just some practical steps to consider: reassess contribution opportunities, including concessional, non-concessional, carry forward allowances or bring forward arrangements. You also want to look at coordinating your Australian super with overseas retirement schemes if you do have one. So that's going to help you reduce tax leakage and just really ensure that your retirement savings in total are working efficiently. Always encourage reviewing your investment strategy to ensure your super aligns with your long-term goals and risk profile. And then the last opportunity I've got here is planning asset disposals around tax residency changes. So this is your Australian tax residency status. So the timing of asset sales can materially affect your tax obligations or your tax outcomes here in Australia, especially when your tax residency changes. So by doing a bit of planning around the disposals of the disposal of your assets, expats can really reduce tax liabilities and improve net returns. So some key considerations include foreign pension withdrawals. So foreign pension withdrawals are a big one that we come across a lot. Withdrawals from foreign pensions may be tax-free while you're abroad, but taxable once you return to Australia. So there's some timing opportunities there. Things like shares, investment portfolios, property, or even business assets may face different tax treatment depending on your residency at the time of sale. We deal a lot with share portfolios. So essentially, there can be opportunities where you're selling down a portfolio upon returning to Australia, and that can be a capital gains tax-free event. Whereas if you sold that portfolio while you're still abroad, there may be some tax implications in your overseas tax jurisdiction. So these small timing adjustments can really lead to substantial savings and make strategic planning essential. Let's get into the market movements section of the newsletter. So after looking at the Australian share market to begin with, so after declining 3% in November, Australian shares staged a recovery in December. They bounced 1.2%. Of the stock market indexes that we track here, Chinese shares outperformed during the month. They gained 2.28%, while we saw US markets really lag. So the S&P 500 and the NASDAQ Composite Index, they were both down. They edged down 0.05% and 0.53% respectively in the month. We can see here, if we break down the performance of the Australian share market, so Australian shares posted that modest gain with the ASX 200 benchmark index up 1.2%. That was supported by strength across several key sectors. So the resources sector in particular was the standout performer. It rose 5.8% in the month of December amid higher gold and metal prices. Financial shares, including the major banks, also delivered solid returns. They advanced 3.4%. But these gains were partly offset by weakness in other sectors, such as the information technology sector. It was down 8.1%. The healthcare sector was down 7%, and the consumer discretionary sector of the market also fell 2.7% in December, mostly due to expectations for interest rate cuts being diminished. Overall, the Australian market's higher exposure to resources and financials contributed to its relative outperformance compared with international share markets during the month. Let's look at global shares. So US share prices, to start with, briefly reached new record highs in December. So they were supported by a 0.25% interest rate cut from the US Federal Reserve in December. However, as the month progressed, those elevated share prices led investors to adopt a little bit more of a cautious stance. US economic data presented US investors with some mixed signals. So we had consumer spending remaining strong, job growth continued at a moderate pace. Inflation eased as well, which was great. So the annual inflation, the annual consumer inflation declined from 3% to 2.7% in the 12 months to November. However, we did see a spike in the unemployment rate in the US. It actually rose to a 4-year high of 4.6%. So that weighed on US equities during December. If we look at European share markets, so they recorded solid gains. So we had the Euro Stoxx 50 rising 2.26%. That was supported by positive business surveys, pointing to steady economic growth and inflation holding around 2%. The UK share market also performed well. We had the FTSE 100 index. It was up 2.17% in the month, following an interest rate cut by the UK Central Bank, or the Bank of England. Getting into the economic update of the newsletter. So in Australia, we saw the Reserve Bank of Australia, they left interest rates unchanged at 3.6%, broadly in line with expectations. So more recently, we've had some higher than expected inflation data come through. So there's been a bit of a shift in terms of expectations for interest rate cuts to interest rate hikes potentially in 2026. So we think that the RBA will remain patient, data dependent before making any significant changes to interest rate policy, at least in the first half of 2026. Overall, Australia's economic backdrop remains relatively resilient. So some key indicators are showing that consumer spending has strengthened, employment growth continues at a modest pace, and the unemployment rate has remained steady at around 4.3%. While inflation remains elevated at 3.4% over the year to November, it has been showing some signs of stabilizing. So this suggests that price pressures are being well managed at the moment, even though further interest rate cuts now appear much less likely than before. So in December, we had the unemployment rate here in Australia. It remained steady, as I said, at 4.3%. So that was despite employment falling by 21,300 compared with expectations for an increase of 20,000. So a bit of a mismatch there in terms of the data and what economists were expecting. So we had full-time employment decline by 56,000 jobs, but we had part-time employment increase by 35,000. So there was a net difference there of 21,000 job losses during the month of November. So despite these monthly fluctuations, the labour market remains resilient. However, the recent volatility has made it more challenging for the RBA to clearly assess the economic outlook. Moving to the global economy now, so geopolitical tensions remained elevated as we moved into 2026. On January 3rd, the United States launched a military operation in Venezuela. While geopolitical events of this nature can unsettle global markets and often push oil prices higher, Venezuela's oil production has been declining due to some aging infrastructure that they have there, despite the country holding the world's largest oil reserves. So if production were to increase, I think Trump and the US administration are looking to move a lot of US oil companies to Venezuela and look to set up there. So that if production were to increase, that could instead place some downward pressure on oil prices, which would be good for markets. It kind of would lower the cost of a major expense for a lot of businesses in terms of the oil price. That could be supportive for shares in the long term. As we move into Asia, so tensions have also escalated in Asia following comments from Japanese Prime Minister Sanae Takahashi, who stated that Japan would deploy its military if Taiwan were attacked. So this prompted some strong responses from China, including warnings of potential economic retaliation, adding to regional uncertainty in that area. So on the economic front, or the central banking front, several major central banks met in December and delivered policy decisions largely in line with expectations. So we had the Bank of England cutting interest rates by 0.25%. We had the Bank of Japan raise interest rates by 0.25%. So it took the cash rate or the interest rates in Japan up to 0.75%. And as widely expected, we saw the US Federal Reserve cut interest rates in December by 0.25%. That's all for the Runway Report newsletter, the January edition. We'll be back next month with another audio recording, and we look forward to bringing that to you next month. Thanks for tuning in. Thanks for tuning in to today's episode. If you want to learn more about Runway Wealth Management and how we help Australian expats, feel free to jump onto our website, runwaywealth.com, and we're also on all the social media platforms.